Hello, everyone. Uh, Welcome to the second class of the chapter 7. Let's talk about long-term asset. In this course, we'll talk about how to do the disposal and the exchange of PPE, property, plant, and equipment. So it's a long-term asset. In the first course, the next course, we'll talk about how to do depreciation, how to do the journal entry of depreciation, and how to record the depreciation expense. So how to do the journal entry of the depreciation? You debit depreciation expense, credit accumulated depreciation, right? So the depreciation expense lead to goes to income statement and lead to decrease of return earning, and the return earning then go to the balance sheet, the shareholders equity part, and a decrease of return earning lead to decrease of shareholders equity, and accumulated depreciation is a control asset. So it goes to the asset part of balance sheet and lead to decrease of the asset, decrease of asset and decrease of shareholders' equity. So then we get a balance sheet, right? This is the first part. For the second part, let's review how to calculate the depreciation expense under three different depreciation methods. They are straight line method, double decline balance, activity-based method. So under the straight line method, we use the cost minus the residual value divided by the service life, right? Then we get the depreciation expense every year. And for the second method, double decline balance, we calculate the depreciation rate of every year. That's equal to 2 divided by the service life. That's 2 times the depreciation rate under the straight line method. Then you times the book value at the beginning of this year. Then you get the depreciation expense for this year. And for the third method, activity-based method, you first calculate the expended cost per activity. Then you use that ratio to times the amount of activity for that year. Then you get the depreciation expense for that year. So you should aware that under the second method, double decline balance, and the third method, activity-based method, if the book value at the end you calculate is less than the residual value, you should set the residual value to the book value at the end first. Then you calculate the depreciation expense and the book value at the beginning of this year minus the book value, which is the residual value at the end. So that's equal to the depreciation expense. Okay, so that's all for last course. Let's jump into today's course. First, let's talk about how to do the sales of PPE. How to record the sales, how to calculate the gain and the loss, how to record the gain and loss. So there are several steps. First, you should calculate the book value and the point of sale. So how to calculate it? You use the cost or original cost minus the accumulated depreciation. So if that equal to the book value and the point of sale. So this is the balance sheet, and this is asset, liability, shareholders' equity. So for that PPE, for example, there's one PPE here, then that's the asset. That's the book value at the beginning, which equals to the cost you bought the PPE, right? And there is accumulated depreciation. and then you use that amount to minus that amount. You get the book value at the point of sale. Okay. And for the second step, you calculate the gain and loss, which equal to the book value at sold minus the book value here. So the book value is what we calculated in the first step. The value at sold is very simple. It's how much you sold for this PPE. And then we can record the journal with the gain or loss. There are two scenario, which is you get the gain, another one is you get the loss. For the gain, you first debit the cash because you sell the PPE, you get some cash, and debit the accumulated depreciation. As we said, the accumulated depreciation is a control asset. We want to remove this part out of our balance sheet. How do we remove it? We decrease it because previously we increase it, and the increase of accumulated depreciation, we use the credit. So we decrease it, we use the debit. Okay. And here, asset, credit asset. So asset is this amount here. So it's an asset we bought, so we want to remove it. So we just cancel it. We just decrease it. Okay. And then you get the gain. Gain is something like revenue. Increase of gain is like the increase of revenue. So get increase the return earning. So if we use the credit to record the increase of revenue, now we use gain. We use a credit to record the increase of gain. Okay, that's for sales. And for the loss, cash is the same. You debit cash. Although you sell the PPE, sell the assets at a loss, but you still get some cash, right? That's what we call sale. And the accumulated depreciation is the same amount and here and here. And for the credit side asset, it's the same. You want to remove the asset. The asset is the book value at the beginning. Okay, because it equals to this amount. And then if you get a loss, you just do the contrary of gain. You use a debit to record the loss. Okay, that's all for the sale of PPE. And then let's look at the exchange of PPE. So what exchange means? So you have an asset. For example, you have a computer. You feel it's too old, and you want to exchange it, and you exchange this computer to the computer of another company, maybe with a Dell. They give you a new one, you give them the old one, and you pay some cash to them. Okay. So there are also several steps. The first is calculate the fair value of the new assets, which equal to the fair value of the old asset plus the transaction cost, the cash you paid to complete this transaction equal to the fair value of the new asset. So why wouldn't us use the market value of new asset? Because you remember it's a transaction between two parties. We cannot observe the market value of the new asset. So we just use the fair value of the old asset plus the transaction cost equal to the fair value of the new asset. For example, we have a computer, old computer, which costs you 1,000, which is now worth $1,000. You know it, and then you pay another $500 to get another 2,000, get another 1,500 computers. But you don't know how much it is really worth for this new computer. You just know the fair value of your assets, the old assets, and how much you pay. So we just plus these two amounts. That will equal to the value of the new asset. Now, with the fair value of the new asset, we can calculate the gain and loss. which equal to the fair value of the new asset minus the transaction cost. Okay, that's equal from here minus the book value of the old asset. Okay, that's a gain or loss. You might be a little confused now, and you will become more clear when we talk in the exercise. Here is like, yeah, here is the typo here. Let's look at the journal. The new asset debit, you get a new asset, you use a debit. And the cash, you pay it. Yes, you pay some cash, you use the credit. And the gain, we just talk about it. We use the credit to record the gain. And for the loss, debit new asset is the same. You get a new asset, increase of the new asset. So you use the debit. And credit cash, you pay some cash. It's the same here as the gain. You pay some cash. So you use the credit to record the cash. And if it is a loss, do the contrary of gain. You use the debit to record the loss. Okay. After we review the content, now let's talk about the exercise. You can pause for 5 minutes, actually as long as you want, and then we will like talk it together. Okay, let's look at the first question. The first question is about sales of the asset. So, about landscaping. So this company purchased a tractor at a cost of 42,000. So it originally cost that much, and sold it 3 years later for 21,600. This company record depreciation using the straight line method, a 5-year service life, and the 3,000 residual value. Tractors are included in the equipment account, so it tells you it's a PPE. The first requirement is record the sale. Okay, to record the sale, we should know the book value at the time of sold, right? And how to calculate that? We should know the accumulated depreciation first, and then we can calculate the book value at the time of the sold using the originally cost book value at the beginning minus the accumulated depreciation. Then we can get the book value and sold. And we can calculate the gain and the loss. So let's do it. And to calculate the book value, we need to get the accumulated depreciation. And the first thing we should know how to depreciate, use the straight line method, and what's the depreciation expense every year. So let's calculate the depreciation expense every year. Per year. That's the cost minus because they use the straight line method, residual value divided by the service life. And then we plug in the number 42000 minus 3,000. So it's used 5-year service life. 5 year. Then we get 7,800 per year. And then we can calculate with the depreciation expense for 1 year. And now 3 years has passed. we can get the accumulated depreciation. Equal to the depreciation per year times 3 years. Then we get 23400 dollars. So with accumulated depreciation, let's can calculate the book value and the point of sold equal to the book value in the beginning, which equal to the cost minus accumulated depreciation equal to 42000 minus 23400 equal to 18600. Okay. Now with the book value and sold, and also we have the sold value, we can calculate the gain and or loss. So gain and loss equal to value and sold minus the book value and sold. So equal to 21600 minus 18600 equal to 3000. Okay, and that's a positive amount. So which means the value and sold is more than the book value and sold. So it's a gain. And let's record the gain. So debit. First thing you should debit is cash, right? You sell it, you get some cash, increase of cash. 21600. And also there is accumulated depreciation on the asset, and on the asset part. And let's cancel it. How to cancel it? Originally, increase of accumulated depreciation, we use the credit, and now we use the debit to just decrease it. So accumulated depreciation 23400, and the credit, the asset, tractor. Use a book value because this is the amount that is on your balance sheet and you want to remove it. And gain, use the credit 3000. Okay, that's all for the first question. Debit cash, accumulated depreciation, credit asset, and gain. The asset use a book value because book value at the beginning because that's the amount on your balance sheet and you want to remove it. And let's look at the second requirement. Assume the tractor was sold for 13600 instead of 21600. Record the sale. So that means the amount is very small, right? So it might have a loss. And then let's calculate. Let's say what's the difference between the gain and loss. Wait a second. Let's use another. Then another color. So for the second question, that's the first question. Let's do the second question. The depreciation expense per year Will it change? It will not, right? No matter how much you sell the asset, at the end, it will not affect, it doesn't affect how to depreciate it. So depreciation expense will not change. Accumulated depreciation will not change. So book value and sold will not change. The only thing that will change is the final step. So let's do a final step. Again, gain or loss equal to value and sold minus the book value and sold. So here equal to 1,3,600 minus 1,8,600, which equal to negative 5,000. So it's a negative amount. So it's a loss. And let's see how to record the loss. Cash, even though this company sell the assets, steal the tractor and a loss, it still get some cash. So that will not change. Here is 1,3,600 and the accumulated depreciation. It's the same amount. Asset, tractor. So that's the book value at the beginning, not change. So only thing change here is not a gain anymore, it's a loss. Loss, we use the debit to record it. Here is 5,000. Okay. And that's all for sale of an asset. You do the, you do the, okay. Let's work for sale of assets. The first step, you calculate the book value and sold. Then you calculate the gain or loss, and you do the journal entry. Let's look at the second question. 5 minutes to do this, and you pause it. And now we will, and after that we will discuss together. So this question is about exchange of asset. Sala Express exchanged land it had been holding for future planned expansion for a more suitable parcel of land along distribution routes. Salad Express reports the old land on the previously issued balance sheet at its originally cost. 70,000. According to an independent appraisal, the old land currently is worth that much. So we have the book value at the beginning and the fair value at the end. And the Seller Express paid 19,000 in cash to complete the transaction. And we also have the transaction cost. First, what's the fair value of the new parcel of land received by Salad Express? So fair value of the, let's look back. The fair value of the old asset, new asset equal to the fair value of the old asset plus the transaction cost. So fair value of the new land equal to fair value of the old land plus cash paid equal to 132,000 plus 19,000 equal to 151,000. Okay, that's the fair value of the new land received by the Sally Express. The second question is record the exchange. To record the exchange, you should calculate the gain and the loss for this transaction. Gain and loss equal to the fair value of the new land minus transaction cost minus the book value of the old land. So equal to 151,000 minus 19,000. Then minus 70,000 equal to 62,000. That's a positive amount, and that's a gain. And let's record the gain. New land. That's an asset. 151,000. Okay, that's what we calculated. It's the fair value of the new land. And then credit cash, because this company pays some cash, credit cash, 19,000. And there is a gain. For the gain, we use the credit, 62,000. And old land credit. Okay. Let's look at the balance sheet. Before the transaction. So asset, liability, shareholders' equity. So before this transaction, let's see this company only. Let's focus on this land only. 70,000. Okay. And let's assume it's from shareholders' equity. And then let's look at the balance sheet after this transaction. The new old land will be removed, and we get a new land. So there is 151,000. That's for the new land. And the decrease of cash. So minus that amount. For liability will not change. Shareholders' equity. So previously it has that much, 70,000. But now it's a gain. So gain need to increase of return earning, need to increase of shareholders' equity. So let's plug in the gain here. So you can see the balance sheet is balanced. Okay. And that's how the balance change because of this transaction. Okay, that's That's all for today's class. Let's do a little review. So we have the two pieces of information. The first is the sale of PPE. You calculate the book value at the point of the sale. You calculate the gain or loss. Then you do the journal entry. And for the exchange of PPE, you calculate the fair value of the new asset, which equal to the fair value of the old asset plus the transaction cost. And you calculate the gain and loss, which equal to the fair value of the new asset minus the transaction cost minus the book value of the old asset. And then you can do the journal. Uh, Thank you. And I will see you next week.